warahmatullahi wabarakatuh. I am IRNA SOFIYA Binti AZMAN, one of the new accounts executive of Boost Malaysia. Previously, I have been working at NADJWA Group, or now known as Group A, as an accountant for 5 years. I will use all of my knowledge gained from working there to improve myself and also the company Boost Malaysia. First of all, let us take a look at the company background. Boost Malaysia Berhad or Boost Malaysia is the national postal service provider and the sole licensee for universal postal services in the country. With a history of over 200 years, the group has diversified beyond the traditional provision of mail and parcel delivery to also offer retail, logistic and aviation products and services. It has also pivoted from a mail company that also delivers parcels to a parcel delivery company that also delivers mail. Boost Malaysia has the most extensive last mile reach, delivering to more than 10 million addresses across the nation. It also has a network of more than 3,500 touchpoints with presence across the country, providing Malaysians the most comprehensive retail network. Boost Malaysia has set up the purpose of the company, which is we are passionate about building trust to connect lives and business for a better tomorrow. Next, let us take a look at what factor to consider to have a segment reporting. The first factor to consider is the nature of business activities. Nature of business activities are identified by any activities carried out by an entity, which here means Boost Malaysia, with the main objective of profit maximization. The second factor to consider is the existence of managers responsible for the activities. Each segment is controlled by the segment manager, who is responsible for ensuring the performance of the segment and making direct contact with the chief operating decision maker. The third factor to consider is the information presented to the board of directors. The chief operating decision maker shall refer to the reports assessed by the board of directors, as it contains reliable information regarding the overall performance of the entity. Let us move on to the next thing, which is the type of segment. There are two types of segments identified in Boost Malaysia: business segment and geographical segment. Business segment is a distinguishable component of an entity that is engaged in providing products and services that is subject to risks and returns that are different from those of other business segments. There are three segments reported in Boost Malaysia: postal, aviation, and logistics. The first business segment is postal, which includes the provision of basic mail services for corporate and individual customers, courier, parcel, and logistic solutions by sea, air, and land to both national and international destinations, direct entry and transshipment, and customized solutions such as mailroom management and direct mail, and over-the-counter services for payment of bills and certain financial products and services. The second business segment is aviation. This includes cargo and ground handling, in-flight catering, freight and forwarding, and air cargo transport. The third business segment is logistics. That includes haulage services, freight and forwarding, shipping agency and chartering services, warehousing and distribution services. Geographical segment is a distinguishable component of an entity that is engaged in providing products and services within a particular economic environment that is subject to risks and returns that are different from those components operating in other economic environments. According to Boost Malaysia, for the geographical segment, the group are predominantly in Malaysia, and the overseas segment Thailand does not contribute to more than 10% of the consolidated revenue and assets. Accordingly, information by geographical segment is not presented. Then, I will go to the next point, which is to identify the chief operating decision making and its responsibility. Before that, we need to know what chief operating decision making is. The chief operating decision making is a function and not necessarily a person. That function is to allocate resources to and assess the performance of the operating segment of an entity. For Boost Malaysia, the Chief Operating Decision Making is the Group Chief Executive Officer, Charles Robertson Brewer. He is a 57 years old British. For each of the strategic business units, the Chief Operating Decision Making and the Board of Directors review internal management reports at least on a quarterly basis. Chief of Decision Making is responsible for making strategic decisions about the entity segments. He is also responsible for the overall business and day-to-day management of the company. He is responsible for the operational management of the group business as well as the development and execution of the strategy.
Hello everyone, I am NOOR NADJWA Binti HASNAN and I am a new accountant executive of Post Malaysia. Previously, I am a manager accountant of Top Glove. Therefore, I will apply all my knowledge and skills in this company. I will present on how to identify the reportable segment and non-reportable segment. First is quantitative threshold test, also called 10% threshold. The 10% tests are based on the reported measure of revenue, profit, and asset that are used by the CODM to assess performance and allocate resources. The revenue test is based on the reported measure of segment revenue, which may include or may comprise entirely of inter-segment revenue. Next, the profit test is based on the absolute amount of reported profit or loss for each operating segment, and the asset test is based on the segment asset reported to the CODM. If operating segment reported are 10% or more of the total operating segment, then it is a reportable segment. Based on the original segmental report of Post Malaysia, there are only 2 reportable segments by using 10% test as shown in the table. Only postal and logistics services meet the requirement of 10% test with 69% and 15.8% respectively. A new segmental report was created with an adjustments as stated in the table in order to have at least 4 reportable segments in Post Malaysia. After the adjustment, Post Malaysia now have 4 reportable segments and 1 non-reportable segments. After determination of reportable segment, the company must do the 75% test, which only applicable to revenue basis. To perform the 75% test, we should divide the total external revenue by the total external revenue of all segments. For segmental analysis, at least 75% of the total revenue of Post Malaysia should be accounted for by the combined external revenue of identified reportable operating segments. If aggregate reported revenue is less than 75%, additional reportable segment should be identified, even if those additional operating segments do not meet the 10% test. Now, I'll show you the new segmental report of Post Malaysia. Based on the new segmental report with some adjustment on the operating segment, there are some changes in reportable status. By using revenue basis, there are 4 reportable segments as in postal, logistic, aviation, and hybrid mail with 56%, 10.15%, 15.7%, and 10.4% respectively. Now, I will share the advantages of segment reporting. First of all, segment reporting provides investors to complete details about the unit, including their profitability. As a result, they can assess and decide on organization investment. Besides, it helps company in making better decisions since expansion and diversification plans are made based on segments results. Furthermore, it aids creditors in determining lending condition based on a segment-by-segment study. Lastly, segment reporting helps shareholders in deciding whether to keep or sell their share. Next, we will look into the disadvantages of segment reporting. Segment reporting can place too much focus on short-term numbers. For example, a company might develop a division dedicated solely to its online work. Before the right people and infrastructure are in place, that division might run a big deficit. If the company's overall success outweighs these losses, they may not show up in the financial statement. Breaking out such numbers such as data point via segmental reporting, it might put pressure on you to lower those losses in order to boost short-term profitability. Second point is about data manipulation. If the data presented in a true management eye style, segment reporting lends itself to data manipulation. This offers company executive more discretion and deciding on how segments are built and what indicators are provided. Managers may combine organization with various business concepts together. To create a more accurate image of performance, losses in an existing division may be combined with losses in an unrelated profitability business unit.
The interim report. The interim financial statements are written and have been prepared in accordance with FAR570, interim financial reporting and paragraph 9.22 of the listed requirement of Bursa Malaysia Security Berhad, and should be read in conjunction with audited financial statement of the group for the financial year ended 31st December 2020, and the accompanying not attached to the audited consolidated financial statement. The interim financial statement have been prepared on going concern basis despite a group loss required during the financial period ended 30 September 2021, and as that date is not the current liability position. Next question. Explain the basis of preparation of the interim report. First is integrate interim report. The interim report is only a small part of the yearly report. Expenses that do not incur just during the interim period must be incurred during the whole interim period. The interim and yearly reports and discussion although the same accounting principles are used for immediately and annual reports, they are not always employed for interim report. Second is standalone interim report. Reports are generated on a regular basis, and the interim report is a different type. It is unrelated to any cost incurred during the interim time. There is no difference between an interim and yearly report. Both interim and yearly reports use the same accounting principle. The next question is identify any two accounting policies in preparing the interim report. First is FFRS 16, property and equipment. According to FFRS 16, a lease must utilize a right of asset accounting technique, which require the lease to recognize an asset on its balance sheet that is present is a right to use the leased asset to the lease period, as well as a corresponding obligation to make this payment. As a result, a lease current operating lease accounting model will significantly alter with an increase both asset and liability on the balance sheet and shift in expenses pattern from generally straight line operating lease expenses to front loaded expenses pattern to increase interest costs and asset amortization. As a result, key performance measures such as return on assets and gearing ratio will be adversely impacted unless the underlying asset is of low value. A lease is obligated to recognize assets and liabilities for a lease with duration of greater than 12 months under FRS 16. This will have an impact on many businesses who have large operation leasing agreement. The next is FFRS 140, investment property. FFRS 140 is property, land, a building or a portion of a building held by the owner of the lease under a finance lease for the purpose of earning rental of capital appreciation or border rather than for use in the production or supply of goods or service or for administrative purpose or sale in the ordinary course of business. Property held by the owner or the lease under the financial lease for use in the production or delivery of product or service of an administrative reason is known as owner-occupied property. The next question is identify the type of interim report prepared by the company. The company prepare their interim report quarterly. We analyze the interim report for fourth quarter ended 31st December 2021. The company prepare is statement of other comprehensive income. Second is statement of financial position. Third is statement of change in equity. Fourth is statement of cash flow. Identify the period of current and of statement prepared by company. The board of directors will be announced the audited financial result of commercial group for the current quarter of financial period ended 30 September 2021. For the first quarter is 1st January 2021 until 31st March 2021. For the second quarter is 1 April 2021 until 31st June 2021. The third quarter is 1 July 2021 until 31st September 2021. The fourth quarter is 1 October 2021 until 31st December 2021. There are type of report and period prepared by the company. First is consolidated statement of profit or loss and other comprehensive income. For the current interim, 1st July 2021 until 30 September 2021, the period is 3 months. For the financial period 1 January 2021 until 30 September 2021, the period is 9 months. For the cooperative is interim 1 July 2020 until 30 September 2020, the period is 3 months. For the financial period 1 January 2020 until 30 September 2020, the length is 9 months. For the consolidated statement financial position for the unaudited 1 January 2021 until 30 September 2021, the length is 9 months. For the unaudited cooperative 1 January 2020 until September 2020, the period is 9 months. For the consolidated statement of change in equity for an unaudited 1st January 2021 until 30 September 2021, the period is 9 months. For the cooperative unaudited 1st January 2020 until 30 September 2020, the period is 9 months. For the last one is consolidated statement of cash flow for the interim 1st January 2021 until 30 September 2021, the period is 9 months. For the interim 1st January 2020 until 30 September 2020, the period is 9 months. For the next question, propose any to adjustment made by the company to be included in the interim report. For the first is zakat. On the 31st July, the company pays 70,000 to the Lembaga Zakat Selangor. For the second adjustment is the company agreed to extend the tenancy agreement from 3 months to 1 year. The impact is increased other expenses 200. As we can see, the other expenses on 30 September 2021 is 9,604, and the company lost from operation 28,457, and we can see the zakat that company pay is 360 ringgit, and the company loss for quarter and financial period is 43,897. Okay, here is a post-Malaysia adjustment consolidated statement of profit or loss and other comprehensive income. Okay, for the first adjustment is other expenses. Other expenses on the previous statement is 9,604, and for the adjustment statement is 9,804, the increase is 200 for the expenses. Okay, so the profit or loss or operation increased 200 and now is 28,657, and the loss before zakat and tax also increased 200, so it will be 40,363, and the previous one is the 40,163, so the increasement is 200, and the zakat is increased from 316 and now it is 386. The increment is 70,000, and the company loss for the quarter for the adjustment is 44,167.